All right, thank you, Andrew. And that was a very interesting talk between Xin and Kenneth. All the best for Continental Capital. And, it's a great pleasure standing here today to talk about Chinese leasing market from a ranger or broker's perspective. We've heard a lot of inspiring discussions earlier from financiers and ship owners on their expectations and perspectives of ship finance. A very quick introduction about myself before I start. Berlin is actually my English name because my Chinese name Berlin has the same pronunciation but different characters. My undergraduate study was in Arabic language. I'm pretty sure that was the reason why I was selected as a tanker broker when I began my shipping career many years ago. But when I started speaking Arabic with my clients in the Middle East, they all seemed pretty confused and all preferred to speak English with me. By a certain point, I even questioned myself, did I really learn the language? But anyway, so I moved back to Shanghai in 2019 and joined my father's broker shop, starting doing ship finance in addition to new building and sale and purchase. So for the past few years, we managed to conclude with about 15 different leasing houses in China. And last month, I had the pleasure of presenting Chinese leasing in Athens at the 40th anniversary of the Costas Grammando Center for Shipping, Trade, and Finance, where I obtained my master's degree. So again, I'm very humbled today to talk about Chinese leasing from the perspective of development and outlook of the Chinese leasing market. In between of analyzing those two topics, I would also like to use a couple of real case examples from our recent transactions to discuss the competitiveness of Chinese leasing and how did Chinese leasing help their clients worldwide. All right, a big picture first. So it is estimated as the end of 2024, the total shipping assets balance for Chinese leasing will reach $100 billion. It could be even more than that, all right? So what does that mean? That's like 35% of top 40 bank lending that's about 35% of top 40 bank lending to shipping, about 15 to 20% of global shipping lending in all forms. So that's like the market share of Chinese leasing. If you want to be more specific, it's likely going to be 17, 18% of all lendings. For anyone who's not so familiar with Chinese leasing, I would like to give a few quick Q&As about Chinese leasing to walk you through. Question number one, a lot of people ask me, can Chinese leasing do loan, do mortgage? No, they can't. It has to be a sale-leaseback transaction, which involves the transfer of title from the lessee, the owner, to the lessor financier. But that's more like only like a nominal transfer on paper. Without any event of default, Chinese leasing will not interfere the daily operation of the vessel. And then what are the main types of finance? Financial lease and operating lease. The key differences being the LTV. Normally, the operating lease will have a higher LTV up to 100%, and the purchase option rather than the purchase obligation by the end of the tenor. The majority of deals we're seeing these days are financial lease. What are the financing documents? Since this is a sale-leaseback transaction, so you need an MOA governing the sale and BBC governing the charter back, plus additional clauses, security documents, quiet enjoyment letter to protect the interests of subcharters, and notice acknowledgement of assignment, including subcharter, refund guarantee, shipbuilding contract, etc. Corporate authorities. How long does it take to conclude? So that really varies. Yeah. So the quickest deal we've arranged, it takes about 4 weeks to conclude. But that was actually an acquisition finance deal. So the owner was in a hurry. So we had to do it really quickly. But normally, for a normal deal, it typically ranges between 6 to 12 weeks from agreeing TS to receiving the final approval, plus another 2 to 4 weeks for documentation. So in total, we're talking about 8 to 12, 14, 16 weeks. And if it's refinancing or new building deals, it might take even longer. How many leasing houses are there in China? So there are hundreds of leasing houses in China, but about 80 of them have carried out ship finance business, although the majority of them are doing ship finance in RMB. So according to our count, there are about 30 leasing houses which can provide ship finance in US dollars these days. And some of them, about 20 plus of them, have completed transactions with foreign ship owners. So my discussion next will be focusing on those leasing houses which can provide ship finance US dollars. And for the sake of argument, we're not going to provide any ranking today in terms of drawdown or total shipping balance because we think there are some other information which are more interesting. All right, so starting from the top left, the total number of leasing houses actively offering ship finance US dollars, according to our account, is 31 for the time being, including 18 financial institutions-backed leasing houses, meaning the remaining 13 are from industry background. So 22 of them are owning shipping portfolio with foreign ship owners, and 25 are actively pursuing transaction opportunities with foreign ship owners, meaning they're like 6 leasing houses. They can't offer US dollars, but they'd rather do business with Chinese domestic owners. And if you look at the graph on the top right, that shows the growth of the leasing houses. Say, we take benchmark year 2021 as an example. Prior to 2021, there were 15 leasing houses which can offer ship finance US dollars. And by this time, the number almost doubled. Now we have 31. One of the reasons, I think, why there was such a significant growth of leasing houses offering US dollars financing was because during COVID time, the global economy was weak, and also aviation industry was suffering. And then people realized, okay, shipping business is booming, and shipping assets are quite suitable for leasing houses. And that's why we saw a very significant increase of numbers. And then from the bottom left, we have 19 leasing houses with experience in doing real operating lease, meaning that they are the owners of the ship and they will take the residual value risk of the ship. Even though now asset price is on the high side, we continue to see some business operating lease deals being done against long-term TC to first-tier charters and users. So I think that's also one of the factors differentiating Chinese leasing from bank finance. And then there are 10 leasing houses capable of offering foreign SPV. There are some other discussions earlier talking about the importance of having foreign SPVs. Yes, there are some European ship owners, especially the Germans. They need European SPVs to be able to apply for tonnage tax. And then there are another notable trend is the number of leasing houses doing non-recourse deals. 5 years ago, we probably had only one leasing house which could do non-recourse. Now the number has reached double digit. That's really helpful for some medium, small size ship owners, and also that's very helpful for some owners like without a holdco structure, like the KG structure in Germany. There are 5 shipyard-related leasing houses, so they can offer quite attractive financing terms for construction finance. So on the bottom right, so we have another interesting diagram that shows the spread of margins among these 25 leasing houses. As you can tell, so this is notably this is the comfortable margin level, meaning that lessors don't really have to stretch themselves or ask for special approvals to be able to get those margins. And as you can tell, 6 leasing houses can do sub 200 bips, and about 4 need above 300 bips. So you cannot see that. But there are 15 leasing houses competing in the range of 200 to 300 bips at the moment. So it's quite tough competitions. But with that being said, margins are not always the most important things for the lessee. So we'll discuss that later. And also, obviously, as we all know, the margins have come off quite considerably over the past couple of years. But that's not just for shipping, not just for Chinese leasing. That actually goes with all the financiers in the world. Because ship finance also has its own cycle, and we happen to be at the low point of the cycle for now. All right, so that was a general overview of the development, especially in terms of number of leasing houses and the type of transaction they do, their margin levels, like over the past few years. Next, I want to examine the competitiveness of Chinese leasing and how Chinese leasing supported their clients worldwide. First, I want to give you a real case example from a very close client of mine, Advantage Tankers, which have benefited quite a lot from Chinese leasing over the past few years. When it did its first deal in 2020, it owned about 17 tankers. And Mingxin was the first one dealing with them. And I think Mingxin was quite a pioneer back then because tanker market was absolutely dismal, was very bad back in 2020-21. So in 3 years' time, now Advantage has 10 different Chinese lessors. Now they own 32 tankers. Has become one of the largest independent tanker owners in the world in terms of deadweight ton. And also leverage on the huge support from Chinese leasing. Advantage also developed a very unique business model. So they have secured 100% of their vessels, 32 of them, 100%. They have secured mid to long-term TC with reputable charters in the world. 3 to 8 years with someone like Shell, Trafigura, Mercuria, which further strengthened the security of the cash flow and also the financing from Chinese leasing. So when we talk about clients coming to China looking for finance, people sometimes talk, they want higher LTV, right? This is the specialty from Chinese leasing. But over the past couple of years, owners are quite cash rich, right? And a lot of owners have been deleveraging. So LTV is not a number one criteria for them to look for ship finance. What are other criteria? Number one, of course, margin. If owners want lower LTV, they need lower margins, yeah? But at a certain point, it's not like the lower the margin, the better, because sometimes owner would prefer like fixed rate to a floating rate. Now owners want floating rate because, they all know so far is coming off. But by end of 2022, early 2023, I remember a lot of owners were pushing for fixed rate, knowing that so far was going to go up. Number two, track records. Because a lot of deals we're seeing now, they are like acquisition finance. So the certainty of the approval, the speed of the approval is very important. Number three, flexibility. Purchase options, for example. A lot of owners pushing for early purchase options because they want to be able to flip out their assets at the early stage. And I think that's also one of the strengths for Chinese leasing compared with the JOCO structure. Other things like LTV ratio, financial covenants, that's also important factors for flexibility. Structure, as mentioned, some owners need non-recourse because they don't have HoldCo, it's a KG structure, or they need a European SPVs to be able to apply for German tonnage tax. So these are the switch of focus from ship owners, and also there are some further challenges for Chinese leasing. When I say challenge, I think there are also opportunities, because we are still seeing a lot of financing inquiries for vintage tonnage, because we'll show you a graph later, right? We'll examine the age profile of the existing fleet. 15 years old, it's not old ships, you can see that. And then now you have a lot of financing inquiries coming from less conventional types of vessels, more niche sectors, PCTCs, MPP, FPSO, offshore vessels, coasters, and there will be a lot of requirements on that. So then that requires leasing houses they need to do a lot of studies. They need to understand that market before being able to do it. Sanction compliance is very complicated for now. Still, there are some tankers which require financing, trade Russia. But there's one thing I need to mention is that trading Russia isn't equivalent to trading Iran or Venezuela. Trading Russia isn't equivalent to sanction, right? But again, we don't have the time to discuss that today, but that's a challenge for financiers to think about. Last one, ESG and geopolitical situations, how to support the energy transition. And also now I know all the financiers, they need to track their vessels every day. They need to see where's the vessel, especially they'll be very nervous if the vessel passes through the Red Sea. So these are the challenges, not just for Chinese leasing, but I think for all the financiers in the world. So this based on, I want to show you another diagram based on our, transactions to examine the competitiveness of Chinese leasing compared with other alternative sources of financing. We'll be competing with banks, JOCO, and debt funds. So if you look at this one on the left side in the middle, so the transaction volume, the ticket size, from our experience, we have done the smallest deal was $4 million, and the largest we've ever done is $400 million. I think that's really the specialty for Chinese leasing. So they have a huge variety. They can take large ticket size. Because if you compare with banks or JOCO, they might be slightly cheaper than Chinese, but their ticket size will be a lot smaller. It will be very difficult for them to do large ticket size. By one bank, it's not possible. They have to do a syndicate. And then comparing with alternative debt fund, Chinese leasing are just a lot cheaper. I think the most expensive Chinese leasing will still be like 100 to 200 bips cheaper than the debt fund. But if you look at the table on the top right, to compare compare them one by one, you see like the ticket size is really Chinese leasing strength. But if you compare with the bank, LTV is also better. But the cost, speed, flexibility, I think that some banks are still like leading the Chinese leasing. But if you compare with JOCO structure, Chinese leasing will be quicker, especially for the first time transaction. Chinese leasing are just way quicker to do it. For JOCO, sometimes it takes 4 to 6 months to clear a client. But LTV cost, JOCO structure still has a advantage. But the Chinese could give earlier purchase options, so flexibility is better. And then if you compare with debt fund, debt fund, Chinese leasing is just better on the cost. But in terms of LTV, speed, different types of assets, the debt fund is still quite good. But for the time being, we've seen a lot of financing inquiries, to replace the debt fund because Chinese leasing is just cheaper. So there have been a lot of refinancing inquiry lately. Okay, I want to give you another real case example. That's a PCTC owner which built ships in China and got financing in China. And then the Chinese leasing house also helped them to get access to Chinese car manufacturers. The reason why I want to say this, right, is to say China has become the largest importer of crude oil, iron ore, grain, bauxite, LNG, and LPG. And it's the biggest exporter of containerized cargoes, cars, steel products. It is also the largest shipbuilding country in the world. Partnering with Chinese Leasing is building a long-term relationship with China, which may open many doors in future. Ship finance is a long-term business. For new building, it takes, normally the tenure will be 8 to 10 years. So you do a deal with China, you do a deal with Chinese Leasing. It's a long-term relationship. Once the documentation is done, once the documentation is signed, the financier and ship owners are on the same boat. So for sure, the Chinese Leasing want their clients to be successful. So that was the discussion, and then we are moving to the third part, which is the outlook of Chinese leasing market. So we mentioned about we have about 25 leasing houses actively pursuing transactions with foreign ship owners, and there are 31 leasing houses which offer US dollar financing at the moment. So our expectation is that, right, so we think the number of leasing houses offering US dollars may continue to go up, may continue to increase, because shipping is a very good asset and a lot of other businesses are under pressure for the time being. But the number of leasing houses which can transact with foreign ship owners is unlikely to increase, because it will take a lot of time and preparations for the leasing house to be ready to transact with a foreign ship owner. So, because it will take time for them to hire the professionals and the credit managers, for them to be able to do that. So that's unlikely to increase. But given the number of new buildings yet to come into water, 4,400 vessels, so we think the financing inquiry will be huge. Say 2024 alone, there were about $150 billion worth new building orders being placed. So let's do a simple math. Say Chinese Leasing take 20% of the market share, and then the average leverage ratio is about 70%. There will be $21 billion worth drawdown inquiries from Chinese Leasing, for Chinese Leasing over the next few years, just only for new buildings being placed this year. So, and in terms of SOFR, SOFR is going to come off, right? This is the forward SOFR curves. In that case, we think owners will have a greater tolerance for margins. So in that case, margin is likely to move up in the next few years. RMB financing, a lot of people mentioning about that. I think there will be a slightly increase of interest in RMB financing, but it's still like it's going to be a relatively small percentage of the whole financing market. Last one is in terms of the cost-efficient vessels. We were discussing about this number, right? Because I really want to show this graph. On the left, you see the median age of the fleet. This is median age, not average age, yeah? So stepping into next year, we'll have like half of the tanker fleet, more than 15 years old, half of the chemical tanker, PCTC tanker, or PCTC fleet or offshore vessels, more than 16 years old. So the fleets are getting really, really old. So for Chinese Leasing, you don't really have to finance like dual-fuel ships, but financing eco ships, they are like 30% reduction of consumptions of emissions. It's already helping the decarbonization of the global maritime industry. All right, so given the time limit, so we cannot go too much into details, but this is like a quick summary, on what we just discussed. So before I conclude my speech, I wish to present you with a Chinese poem. A single flower does not make spring, 一枝独秀不是春, yet 100 flowers in full blossom bring spring to the garden. 百花齐放春满园. So I like that poem because it describes the beauty of competitions. For Chinese Leasing, they've always been facing competitions both internally and externally. So in terms of internal competition, I don't think they're always competing directly with each other by targeting different types of vessels and owners. In my view, Chinese Leasing collectively are as dynamic and competitive as ever, providing one-stop and tailor-made services to all kinds of ship owners in the world. And I'm sure we would all concur, a healthy and robust Chinese leasing market will continue to make even greater contribution to the global maritime industry. Thank you.